Hi, welcome to Market Alert for Tuesday, 17th of October 2017. And yesterday, this is why I'm saying stay out of the markets at the moment. You can see there the pound sideways, doing absolutely nothing. Enough to generate signals, but not enough to follow through. The market then becoming sideways, as you see there. Manages to bounce a bit here, but then becomes sideways. Going to drop, becomes sideways. So the market's just spending most of the time stuck in a sideways move. See here the market's back above the 132.87 for the pound, but again very sideways and slow moving day for Monday. News wise today, what have we got? Starting from the top for the UK for the pound. Got a bit out today actually. MPC Ramsden speaks, never heard of him before. PPI input, RPI, CPI, and then we've got the ZEW economic sentiment, and another MPC one out speaking at 10:15. They're bringing them all out, aren't they, at the moment? Then we got final CPI, and Carney's being wheeled out today as well. Blimey, there's a lot of news today. Hopefully this might just give the market a bit of a lift or something. He's out at 11:15. Then you've got import prices, industrial production for the US, and then again we've got another central banker out at 6 p.m. Harker's being wheeled out. So a lot coming out today. First for the pound early on with the CPI and the RPI. That will be interesting to see what happens there. In fact, let's just wheel back there and have a look at what we've got forecast. They're still showing an increase in both of these at 9:30 this morning. In the Dow for yesterday, well, similar picture. Again, this is why I'm saying stay out at the moment. There's no volatility in this market. It's just being allowed to creep up. Again, you can see you get the signals and then you get no follow through. The market, it then sort of creeps higher, and on the overnight market you'll see exactly the same. You see the market there sideways. It's making its all-time highs in the overnight market at the moment, or in the pre-market session. 22,960, 40 points off the 23,000. I've been talking about this for weeks, or since we broke the 22,000. This is where the market's going, and no doubts about it's going to actually get there as well. In the news, so we'll have a look at that first. Start off here, we've got VIX shorts hit new record as S&P surpasses 2017's most bullish forecast. No surprise there whatsoever, because, as I say, they want the market higher, and they'll continue to do that. And one bank's shocking warning: central banks will lead to an orgy of blood. No doubts about that. And there was one also from Deutsche Bank, which we'll have a look at in a minute. We've got Black Monday 2.0, the next machine-driven meltdown article there. And Deutsche Bank, this is the one I was thinking about. This is the catalyst for everything. Deutsche sees only 2 more rate hikes before the Fed loses control. So you can see everybody's trying to talk this market down, even putting in news articles there where somebody turned 10,000 into 17 million using put options. But I don't know whether that's to get people to go start buying put options or what. I have no idea. Morgan Stanley sees greater risk for correction than we've seen in a while. And all of these people are long, of course, or offloading to the general public. Interesting how the markets continue to make in these highs as well. Stock surge to more record highs, but Taylor Chatterspooks bonds, dollar and gold. That's Taylor is going to look likely to be replacing Yellen. And 10-year spikes over 3%. That's interesting. And investors are ignoring evidence. Bring that back a bit. Ignoring evidence at their peril. I mean, yeah, of course, at some point this lot's going to fall apart. There's no doubts about that, but at the moment they're doing a brilliant job of managing to keep everything together there. Right, let's have a quick look at the implied volatility before we conclude. And on the implied volatility front, we see 731 down to 706. So we're going back down towards where I didn't think we'd head back to, the 624. Got 683 in the way before this, depending on what happens with the RPI today and what Carney's got to say. But at the moment, it's one way bet, has been for some time. As I keep saying, they want the market higher. They'll keep selling the VIX. They'll keep sending it to record lows until they can't do the trade, basically. It won't go to zero, but don't be surprised if they attempt to try and do something like that to confirm the complacency that they've put in place at this time. And then, of course, they will shaft all of the small investors, as they always do. But nobody knows the date or time. But one thing is for certain, these sort of lows in volatility, when unleashed, when the energy is unleashed, it is quite volatile, to say the least. Right, that will do it for this morning. If there's anything to report, I'll let you know. It is Tuesday, but we do have the RPI from the UK to try and give the pound a bit of a boost. It worked last month when the showed an increase. Now, whether the markets become immune to that, we'll soon find out at 9:30. But it is Tuesday. Markets factored in the news over the weekend, and no doubt the Dow will continue just to keep moving higher. It's not sustained, but we know that in the longer term. But at the moment, that's the way it is. And it's the market seems to have gotten about how corrections work and how pullbacks work. At the moment, it's just a one-way bet to the upside. Right, that will do it. As ever, thanks for watching. See you in the next.